Welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at one chart which nobody seems to ever look at, and that is the 12-month candle chart. It gives an absolutely unique insight into Bitcoin from a completely different angle. I'll also be having a look at the 60-day cycle and why we may well have started a new cycle. And finally, I'm going to have a look at the overall bigger picture of exactly where we are and where we're heading over the next few weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so we're going to start off with the title of this video and why Bitcoin has to close above 46,202 by the end of this year. So the 31st of December close has to be above 46,202. Why, you may ask? Very good question. I'm going to show you the 12-month chart on Bitcoin since its inception back here in 2010. So we all know that these red lines are the halvings and these yellow lines are the tops of the 4-year cycle. So what's interesting is that on every single halving year, so back in 2012, 2016, 2020, and now we're coming up to 2024, but the 3 previous halving years, we had a green candle here, green candle there, and another green candle there. So the question is, will we get another green candle in 2024? Secondly, the tops of the market on the yellow lines, i.e. the tops, once again, we had a green candle there, a big green candle there, a big green candle there, but this one was much smaller than the previous candle, but we still got a green candle. So in the halving years and the tops of the markets, we always got 2 green candles. So is that telling us that the next 2 years are going to be the green candles? If the 4-year cycles are to play out, then obviously that should be the case. But as I've mentioned before, we could well have a left translated cycle, which means that we may have a blow off top in 2024 and then 2 years of a bear market. So this time around, there is that possibility of a green candle here on the year of the halving and the red candle in the following year. So that's just an insight into exactly what's been happening in the years of the halving and the tops of the bull markets all along since 2010. So where does this 46,202 come in? If we have a closer look at the last 2 12-month candles, the current one being this one here in 2023 and the 2022 candle. Okay, so in 2022, the bear market, we had this red bearish engulfing candle here. So the 2022 candle engulfed the previous candle here. So this is a bearish engulfing candle. And the only way to negate this candle would be for the current candle here. And we're nearly there. You can see we're just a little bit off. To negate this bearish candle, we need to close above this green candle, the top of this candle here. And obviously the top of that candle was the start of this previous year's candle. Close of this candle here in 2021 was 46,202. So what we need with this current candle here in 2023 is a close above this candle to negate this candle here. The way the market is going for Bitcoin, it looks with a high probability that we will probably do that. But it's something we need to be aware of. If we get rejected here below 46,202, that could be bad news for Bitcoin, and we just need to be aware of that. Because a rejection up here normally means that the following year, the following candle, you would expect to be a bearish candle. And it's all a case of probabilities, not guarantees or certainties. And always remember, the trend is your friend until the end. So while the trend here since 2010 has been a green candle on each of the halving years and the following year of the halving. So until something changes, so the probability is that in 2024, we're going to get a green candle. And in 2025, we're going to get another green candle based on the historical narrative of this chart. Okay, I'm going to move on to the 60-day cycle and why that's very interesting at the moment. So what we've had is the start of the last cycle was here on 12th of October 2023. The midpoint was 11th of November 2023, and we made here a high, and after the midpoint, we made several highs here as well as this one here. before the 60-day end of the cycle. This means that we had a right translated cycle. We had a higher high after the midpoint. And recently we've had a fall into the 60-day cycle low here, which is what normally happens at the end of a 60-day cycle. And we were expecting that if there was another fall, they would come down back below around this level here, around 38,000. So if this was going to be an ABC correction, it would normally have come down to this level here. However, as we know, the supply of Bitcoin is very low and the demand for Bitcoin is very high due to the ETF narrative that's being played out in the background. And if you watch my last video, you'll know that I gave you two levels here. One level based on the tops of these candles and the other level at the bottom of these candles. So it was 43,500 here and 40,100 down here. And what we've done overnight is that we've now closed, if we have a close look over here, so these were the two levels, 43,500 and 40,000 down here. And as I mentioned, that if we break above the 43,500, then we're more likely to test the 45,000. And that reduces the probability of retesting the 40,000 down here. So we've gone from this range to now this range. This is where I would expect the next range to form between 45 and 43,500. And overnight what we've got is a close above the 43,500. So it's gone above the wicks over here. So Bitcoin has now closed above the wicks of all these candles over here. And that's a signal that it wants to move higher. But we do need to close above the 45,000 to confirm that. And once we go above the 45,000, that will signal the confirmation of a new 60-day cycle. So at the moment, this particular candle, the low of which is 40,181, appears to be the bottom of this 60-day cycle and the beginning of a new cycle up here. So if we measure this from the previous cycle low, this is on day 60 itself. So we've got an exact 60-day cycle. And if we have a look at the weekly, what we've just had with this big massive move to the upside with Bitcoin are 8 green candles. And that was broken up last week with this red candle here. But we've now so far this week returned to a green candle. So this is now forming a bull flag over here. And bull flags obviously have a higher probability to break to the upside. So this is what I would expect with the narrative of the ETFs, which should be getting approval any time in the first or second week of January. So we're only 2 to 3 weeks away. And until then, the expectation has to be that very few people are likely to want to offload their Bitcoin, while there's a huge demand from institutions as well as retailers wanting to get in to get a slice of the pie. And this is what's driving the price to much higher levels. So let's see where it can get to. Our pi cycle top is the second target that we set. The first one being the RSI MTF line, which we obviously met at 40,000, but that line has now moved up to 47,000. So the pi cycle at 57,000 and the RSI line at 47,000, these two are the most likely targets between now and the approval of the ETFs and maybe a week or two after that. So these are the two levels that we really need to keep an eye on. And we know that the pi cycle has a high probability to be hit because in each of the previous 3 halvings, we've hit this red line on each occasion, all before the halving. So before April, I would expect a 57,000 target for Bitcoin. So going into the new year, I would expect new highs along the way until we hit this $57,000 target. Whether 57 is going to be achieved before the ETF approvals or after it, but certainly high probability before the halving it should be hit. And of course we've got this 48,000 on the left hand side. This is a very critical level. So 47, 48 is a very important and very high probability target. So that should be the next target now once we get above the 45,000. And as you know, we use the 60-day cycle lows and the start of a new cycle to determine the start of our swing trades on the Bitcoin miners section. But because of what's playing out at the moment with the Bitcoin miners is that they're now catching up, having fallen behind since July. They're all catching up at the time when the Bitcoin price is actually going sideways. So the consolidation here has been allowing the Bitcoin miners to be actually taking a big move to the upside. So if you measure Bitcoin when it came to 45,000 here on the 8th of December, the Bitcoin price has been going sideways and consolidating in this range between 45 140,000. We can see that the miners have been catching up. And if we use Marathon as an example, this is the 8th of December. And from the bottom of that to yesterday's close, there was a 42% increase. And since the beginning of October, Marathon, like a lot of the other Bitcoin miners, have had a massive increase, with Marathon at 239% when it just topped out yesterday. And in the last 6 days, Cypher Digital Mining has actually gone up to the top of the market. Yesterday was 83%, and it actually closed about 67% just in the space of 6 days. So normally in the private Bitcoin miners section, we would wait for the confirmation of the bottom of the cycle before entering the swing trades. But because of what's been going on here, while Bitcoin's been consolidating, the Bitcoin miners have been catching up. So it's from yesterday, we've now entered into some swing trades with the view to taking profits in the next 2 to 3 weeks as that ETF approval narrative actually plays out. And the whole purpose of the private Bitcoin miners section is basically that after the halving, just like what happened in 2020, we want to catch this big move from the halving over here to the top of the bull market, similar to what happened here. This was a 223x move. Obviously, there's no guarantee that we're going to get a 220x move here, but as we know, the trend is our friend, and these movements tend to repeat themselves. So this is what we're expecting, and only time will tell whether we get anything like that. So this is the 2-year journey that we're on with the Bitcoin miners from where we are here to hopefully at the end of 2025, where we should get a multiplier or a leverage play on the Bitcoin price. So while Bitcoin is expected to go up to 80, 90,000, so from where we are, we should see about 100% increase. But with the Bitcoin miners, you can multiply that by 6, 7, 8, even higher than that. And if you want to join us on that 2-year journey to the top of the bull market for Bitcoin and the leverage play with the Bitcoin miners, then all you have to do is click the join button here. And for the price of a coffee per week, you can join us with the exposure of that leverage play with the Bitcoin miners over the next 2 years. And what we do there is basically the Bitcoin analysis and the 60-day cycles with a view to doing swing trades, and we're on round 5 at the moment. We also track a long-term portfolio there, and our main focus is to ride the Bitcoin leverage train for the next 2 years. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.